Okay, so this is a supplemental outlook to the first outlook done yesterday for week 3. So this is going to focus on the NASDAQ price action, a little bit more nuanced than what was considered the overview outlook that I did on Monday. So what we have here is a liquidity draw from the macro perspective. Established here, we have a liquidity point, and then we have a couple of annotations that are going to show up more prevalent on the 4-hour time frame. So reiterating that on the daily or on the macro perspective, I'm just establishing the overall bias, and establishing the structure is going to be done on the 4-hour time frame, which frames up how we're entering the trades and understanding the flow of price action. All right, so now that we're here on the 4-hour time frame, this liquidity draw, as we defined it earlier, is easily seen, where we have a previous liquidity point, we have a high, which essentially really this is like a structural point, so a previous structural object, and then we have the purge of that structural object, and then the action is defined as liquidity draw because it formed a low without sustained price action moving lower. We actually formed a low here based off of this low of that wick, this being the lowest low, and then that having a higher low, and then we drove higher. All right, so the reason why this price action was difficult to read was based on the unwillingness shown here and then the consolidation that's going on. And the fact that we have unwillingness here without taking out the previous high, it yielded an interesting analysis problem for us. And so I think I've come to terms with a solution for this problem. So starting with defining just the basics of a price leg. All right, so because we don't really have a new higher high relative to the macro liquidity point, which is the all-time high, what we have to do is use the local region that we're looking at to define our price leg. So this price leg is actually going to exist inside of this short bearish run that's happening, not a macro state or a change of state or phase, but it's inside of this bearish price action here. So our price leg that we're going to use is actually going to start with this being our structural point, and now we're going to forego seeing any of the data existing before the structural point as relevant as of right now. The only thing that I'm worried about would be the high being my liquidity point as a target. That's all I'm going to use this data for. So as of right now, though, what I'm going to use is this as my structural point, and then look at the lows and highs from the structural point, post-structural point, to define my price leg, okay? And so as I see this, we have our structural point low. Then now I just want to identify the lower lows or the higher highs and higher lows post this structural point. So we have high, low, and based off of the smiley face and frowny face, that's how I'm determining the highs and lows. High, low, high, low. Now, why didn't I choose this area? Well, there's no real high, and there's no, I mean, this is a low, but there's no real high here because we have high, 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 high. So I don't consider this as anything here. So our last high is here, last low. Then this is a high for sure. This is a low. Then we have a high, and then we have some sort of action that occurs here at this low. And so at this low here, we need to define what this is because this is a purge. So because that's a purge here, all right, because that's a purge here, I need to see, is this a liquidity draw or a break of structure? If it's a break of structure, then that will solidify the pullback and establish my price leg. So if it's not, based off the definition of liquidity draw, if a low is being generated here, then this will be continuation of the impulse phase of the price leg. And because of the definition of liquidity draw, we clearly see that this is a low that's formed. So this is actually continuation of the price action. So this is a liquidity draw. And so now we have, low, high, low. All right, now we're looking for our next higher high. So I'm not choosing this high, I'm not choosing that low, I'm looking for my next higher high. And so that next higher high actually ends up being here. So we have high, low, high, low. Okay, then we get to this high, and then we have unwillingness to go higher. We have some sort of draw on liquidity, as in that this is a low here, essentially. Or actually, did I say this is low? Yeah, this is the low, sorry. Low, high, nothing, unwillingness, low, like basically we're just pulling back ever so slightly until we get to this being our low. So let's see what happens here. Do we break that low before we create a new high? We do not, so we end up generating a new low here. So we have high that creates a new higher low. This is our previous higher low, so we have low, high, higher low. And then this high, ever so slightly after checking it, actually broke or purged this high that we have here. Now, this is interesting. Why do I say it's interesting? Because we have a purge. So because we have a purge, we need to assess what action occurred here. Is it a draw on liquidity or is it a breaker structure? Well, it should be very clear that this is a draw on liquidity because we have a purge of a previous liquidity point, and then we have a high being formed. So this actually is a liquidity draw. And so because I see this as a liquidity draw now, this should be indication that we could have a potential transition of price action to the low side. Now, what does this mean when I say potential price action transition? What this means is if we have a liquidity draw post or a liquidity draw opposite to the current trend or the current impulse, then that means that this could be the beginning stages of the pullback transition, right? So we could have a transition of price action here. So now that we have a high, cool, we have a liquidity draw, we've established that this is our liquidity point here, our highest liquidity point. Now we want to see, does price transition lower or does it transition back to higher? And so ultimately, once we drove lower here, what happened? Well, if this is our previous liquidity point, because now this is no longer relevant, if this is our previous liquidity point, we need to assess now what action happened here. Well, seems to me that a new low is formed where we have a low, high, and then now we have a new low, and then we pull back. This pullback in this area is very interesting. It's very, very, there's a lot of actions that are occurring here, which is indication of transitions. So we have a transition of bullish price action to bearish price action. Then we have a liquidity draw of an immediate low. And then after that, we have a liquidity draw of immediate high, a liquidity draw of immediate low. Then that led to unwillingness, and that unwillingness to take out the previous liquidity point actually ended up in an action going lower in continuation of this bearish price action, which caused a breaker structure, right? Why do I call this a breaker structure? Is because this is now our new liquidity point. What we did was we shifted this liquidity point here to the new one. So that's the action of a liquidity draw there. We shifted our liquidity point, we had unwillingness, and that led to a breaker structure. That breaker structure right there is what solidified our price leg. This is the pullback. And so now our price leg actually exists from our structural point here to our liquidity draw or a liquidity point there, which is the high of the range. And so now we have a discount side of a price range or of our range, and we have a premium side. So I'm going to get rid of this line right there. All right. And so that defines our price leg. And so now what we should be looking for inside of the discount side of this price leg are areas of interest. Well, immediately what shows up to me is I see mitigation of this price gap here, And that price gap there, right here, yielded a area of interest in the form of a sponsored candle, but we're calling it area of interest, right? So that ended up creating this here. Yeah, right there, that's our area of interest. All right. And so our entry opportunities based off this area of interest, actually it dove like really deep into this, but not necessarily important because we're not looking for refinement. We're looking for response. And so once price decided to transition or basically create this low here, we can now, go down and apply our response model. And so looking at it from the 5-minute perspective, inside of this area, this essentially mitigated a 1 minute, something, if you're looking at the refinement. But now what you want to do is look for that excuse me, transition of price action to find entries. And so I'm not going to do that here. That's not the point of this video, but it was there. And so that right there was the ideal area in order to get in on entries for continued bullish price action. And now in current time, we are looking to continue this price action to break out of this price leg and continue the secondary impulse. And so as of right now, at the time of this recording, we have just mitigated 50% of a current price gap and looking for continuation to take out this high and then aim more towards the all-time high, which is the macro liquidity point. If you have any questions, please let me know. I hope you learned a lot in this video. This is a much deeper dive into how I see the markets and analyze the markets. Peace.